Hi, and thank you for watching us here at Tax Talk UK, where we talk about all things tax and other important aspects of being self-employed, working for yourself, running a small business. So we've been asked if we can explain a basic tax calculation, how you would work out what your tax liability is to be. So before I talk about that, if I could please ask you to take a moment to subscribe to our YouTube channel. That way that you can quickly refer back to this information if you need to, as well as being able to find other information that we have available on a whole wide range of topics, all aimed at supporting you in your self-employment. So talking then about how to calculate your tax. So I'm going to just today talk about a very straightforward scenario where somebody has no expenses, no adjustments to their personal allowance, so has a standard personal allowance, just to give you the basics of how this works. Of course, if you don't have a standard personal allowance and your tax code is different to that, then you should look at your tax code to see what adjustments have been made. It could be a marriage allowance transfer. There could be tax that's been underpaid in previous years, expenses that you've claimed, untaxed income that's been collected through that through the code. So lots of things can affect your code. So if there's any of those things that apply, you will need to factor those in, and this example won't include those. This is just for a basic explanation of how this works. So we're going to be talking about an annual income. So of course, if you are wanting to work that out on a monthly basis, then you would divide all of the thresholds by 12 to get and all the figures by 12 to get the monthly equivalent. But we're going to, for an annual basis, we would add up all of the income from all of the sources. So from any employed sources, any self-employed sources as a sole trader, any dividends, either from your microentity company or from other shareholdings, all of these things. So the important thing to note is that while some of these things include to your total income, some of them have their own threshold. So for example, savings interest has its own rate of interest and own threshold. So we're just talking about your actual earned income, so add up all of the income for the year. So what we need to consider is that the personal allowance, the first 12,570 is not going to be have any tax on that. So that amount, so zero for that amount. So now we need to take that amount off of the annual income, because there's no tax liability. And we then need to look at what income is going to be taxed at standard rate. So that is anything over the personal allowance, so 12,571 up until 50,270 is going to be taxed at 20%. So if your total income is less than 50,270, then simply that calculation of taking off 12,570 and then times what's left by 20% will give you your tax for the year that's going to be due. If your income is over 50,270 up until 100,000, because we're only doing up to 100,000 earners, then anything over 50,271 up to 150,000, but over 100,000 you lose your personal allowance. So that's why we're only going up to 100,000, because this is supposed to be a simple calculation. And so anything from 50,271 up until 100,000, that is going to be taxed at 40%. 40%. So whatever, so when you've taken that income and then add that to the amount that was taxed at 20%, and then that gives you your total income. Now, as I say, the 40% bracket does go up to 150,000, but over 100,000, you do start to lose your personal allowance. So that is why we haven't included that. And the other things to note are that if your income is over 50,000 and you receive child benefits, then you will have a high child benefit charge included in your tax calculation, to which you will need to complete a self-assessment tax return for. And also we haven't, this doesn't take into account national insurance. So if you're self-employed, if you're employed, then your employer should be deducting their national insurance for you automatically. If you're self-employed, you will have the set amount of class 2 national insurance to pay if you're over the exemption threshold, and then anything over the threshold, you will pay 9% self-employed national insurance on 9.73%, up until the high rate threshold of 50,270, when it drops down to 2.73. So you then need to add the national insurance on, because that is going to be included in your tax calculation if you're self-employed. But as I say, if you're employed and you're just trying to work out your how much tax that you'll pay, then yes, that will be class 1 national insurance that you will pay. And so hopefully that helps to give you an understanding. If you're completing a self-assessment tax return and you're wanting to get ahead on making sure that your tax has been calculated correctly, then hopefully this gives a really basic, and we'll explore some more complex scenarios in some other videos. But basically you're adding all of your income together, you're taking off your personal allowance where you don't pay any tax, then you're comparing the amount that's left at standard rate tax up to 50,270, and that amount you're paying 20% on, and anything over that is 40%. And as I say, there's other implications once your income's over 100,000. And as I say, we explore those things along with sort of national insurance, child benefit in other videos. So I'm not going to cover those now, because hopefully that answers the question that we were asked. Thank you very much for watching. Thank you. Goodbye.